What's up everyone, it's Scotty with Money Investing. So one catalyst taking down the entire electric vehicle market, and of course Tesla is the one to blame because they just launched brand new standard versions of their Model X and Model S in China that are $10,000 cheaper than their counterparts over in the US, and that's not only putting pressure on Tesla themselves, but it's also putting pressure on other electric vehicle makers in China, such as Li Auto, XPeng, and our beloved NIO. So I hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included, as well as the intrinsic value spreadsheets, the members only private videos, and a lot of other benefits, including a 16% annual discount that does expire at the end of this month. So there's 2 more weeks left if you want to take advantage of that as well. So links are going to be down below. So this right here is the catalyst, which again came out yesterday. Tesla launches cheaper Model S and X versions in the US or in China with shorter ranges. So I'm pretty sure that's not in the US, that is in China. So if you come over to Tesla's actual catalyst here, let's just go over to, there we go. So that's the catalyst. So Tesla reduces prices for Model S and X in China in second price cut in the country this week. So it reduced the prices for its premium Model S and Model X vehicles in China. Second price cut in the country this week. Multiple media outlets reported Wednesday, and the electric vehicle manufacturer is now selling Model S for $103,000, a 6.7% decrease. And of course, Model X coming in at down 7% on the price from 898,000 yuan to 836,000 yuan. And the price cut comes just 2 days after the company reduced the Model Y sport utility vehicle long range and performance versions by 14,000 yuan and extended an insurance subsidy for the basic versions of Model 3 sedans as well. Now, this right here is going to be a price reduction. Also comes after the company's China-made vehicle sales decreased 31% in July from June. The first month-on-month decline since December is also what Reuters reported. The stock price is down about 2.5% pre-market right now, coming down to $227 per share. And not only Tesla is down, of course, it's taking down other stocks with them. NIO is down almost 6%, back to $11. We've got XPeng right now, EXPV, down a little bit over 3.6, and Li Auto is also lower, 1.7%. So it's a very, very rare that you've got one catalyst which you've got net negative for all companies, right? Usually if there's price cuts, I mean, if Tesla was pushing higher, NIO maybe was going down, because again, lower prices means more demand for Tesla vehicles. That would mean more competition, of course, for NIO and Li and XPeng to lower their prices, because they're going to get pricing pressure from Tesla. So that could be a net benefit for Tesla because of higher demand. But no, it's because of margin. So it's kind of like what the market's pricing in is that, okay, these price cuts are negative for NIO, XPeng, and Li from a price pressure standpoint, but it's also negative for Tesla from a margin pressure standpoint. So it's kind of like, okay, it's negative for everyone, right? So just downtick everybody at the moment is what we're seeing. But, you know, this video, I want to keep it to Tesla and, of course, NIO specifically. And as we have already talked about with Tesla being one of my biggest, actually my biggest position in the portfolio right now, I do have pretty sizable position, but at the same time, I have sold calls to hedge that potential downside for these types of events, right? For the price, for the fact that stock price is down over 25% from its recent highs of well over $299, close to $300, is the very reason why we take these hedges in the first place and sell calls when the prices are higher, so that we can protect on the way down. And of course, right now I've got 4 calls, right? 400 shares already serving as collateral against some of my position here, and all those calls are printing. Some of them are up like 90%, 95%. Some of them are up like 85%. Some of them are still in the money. They're going to start getting out of the money the moment it breaks below 225, maybe 215s. They will start getting out of the money, and they do expire in September, November, and December. So I will be looking at closing those positions out the moment they're up like 95, close to 100%. I want them to be as worthless as possible so I can buy to close for next to nothing. But this right here is going to be that technical support and this sort of technical analysis that we have talked about. I have no doubt in my mind that I think Tesla can come down to sub 225, maybe 220s. We are now sitting inside this green rectangle once again. We've been talking about Tesla for a very long time, but if you go back a couple months ago, I still remember very, very, it's still fresh in my memory that we had a breakout here for Tesla. That's when I was selling calls. Obviously, the comment section was not that appreciative of selling those calls because people were like, hey, Tesla's going higher. It's going to keep going higher. And I obviously was rolling my options out to take advantage of that because Tesla obviously kept pushing higher, kept forcing me to roll my options. And now they're actually starting to play out because Tesla's once again rotating back lower. So the bottom line is you can't perfectly time these trades, but as long as you have a good understanding of risk management, trade management, you know how to roll your options, you know how to basically manage your position, eventually, of course, it all plays out, it all works out. But of course, you have to have that understanding. So that being said, Tesla's support, like I said, is going to be that confluence of those moving averages. We got the 50 SMA, we got the 300 SMA, sitting roughly at 217s, 219s. So I wouldn't be surprised if you do see that, maybe that accelerated sell-off for Tesla, maybe down to 225, sub 225, closer to low 200s. But I only see this as a small, intermediate, medium-term pullback before making that next leg up higher. And now this old resistance and this previous support is potentially going to start acting as a new support for Tesla once again, with a resistance sitting all the way up to 240s to as much as 275 for Tesla. Once again, I'm also going to be starting to look at some cash secured puts on Tesla here. So we'll take a look at 150, 170 strike puts just to see what the premiums are like and if it makes sense. I will be looking to sell some puts here to generate some premiums and of course higher return on collateral as well, because I am sitting on a ton of cash as I have deleveraged my positions in the market. Talking a little bit about NIO, same thing. We have seen a pretty significant pullback and it's not a surprise. It's down about 30% from its recent highs. We talked about the falling pattern, in other words, the lower highs and the lower lows. So this right here is the overall technicals on the stock here. So if I remove the moving averages, this is the overall pattern. This is the lower high that we were watching very closely. Obviously, we got overbought. RSI, MACD, extremely overstretched. And right now we're seeing a bit of a pullback. So very strong support for NIO is going to actually be sitting at 1075, closer to 1050s, in line with this previous resistance, acting as a support. And of course, that 21 EMA also sitting right there for the price. So this right here is going to be that level to focus on for NIO as well. But bottom line is, I think more specifically for Tesla, I'll get back to that. So NIO here, again, support level is going to be inside this green rectangle. Right now down about 5.75%. So 1050s, 1075 is going to be that level to pay attention to. Now, coming back to Tesla, fundamentally speaking, I do believe that, yes, these price cuts are a way for Tesla to spur some demand and continue to keep those volumes and productions higher. But margins is the real issue for Tesla, right? That's what the market's pricing in, is price cuts means lower margins, means lower profits. That's the chain of thought the market's kind of tracking right now, which I kind of disagree with. Maybe in the short term it makes sense. Yes, that's exactly what's going to happen. But over the long term, I don't see it that way, because right now, like I said, Tesla is very much in that Apple mindset where they want to get that install base as high as possible. Lots of people owning Teslas, driving Teslas, so they can collect as much data as possible so that they can start working and accomplishing FSD. Obviously we've got the supercomputers and the Optimus Prime robot and energy storage, solar panels. There's just a lot of potential that Tesla can eventually and will eventually unlock. So that's the analysis. Hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Let me know your thoughts down in the comment section below. What do you think about Tesla right now? Are you buying, selling, holding? What is your fair value? What are you doing at the moment? Let me know in the comment section down below. As always, happy investing. I'll see you all in the next video.